Hey everyone, it's Nishi here. In today's video, I want to talk about how employee benefits work. So before I go into this, I just want to remind you, if you go to our website, naccounting.co.uk, we've got some really good content to help you grow and scale your own business. We've got more of these videos, we've got our blogs, we've got our free guide, we've got our free webinar, we've got our quarterly planning days, and we've got our podcast. So some really good content there to help you get the information you need to really make the right decisions to scale up. But back to this video. So what is the point in employee benefits? Like, everyone's always talking about employee benefits, but I don't think I've really come across many accountants which explain why they make sense in just plain terms. Right, so if you think about it, like, the alternative to giving employee benefits is just to pay them, or you can give benefits on top of their pay, or in exchange for their pay, because you can do something called salary sacrifice, so people get paid a little bit less, and then they get the benefits instead. But let's talk about why an employee might want to do what we call salary sacrifice and give up some of their pay to actually get those benefits. Well, think about it this way. An employee pays 20%. Let's talk about basic rate employee. Employee pays 20% of their income tax on their income, but they also pay 12% in terms of national insurance. And then as an employer, you pay like 14.25% as employers' national insurance. So there's definitely like allowances and stuff to reduce the employer's national insurance element. But in general, if you ignore the employer's national insurance bit, employees paying 20% plus 12% national insurance in terms of tax. Overall, let's say you give them £100, they're going to pay £32 of that in tax. Well, one of the benefits of actually giving them employee benefits essentially is because even though they have to pay tax on that employee benefit, so what HMRC says is, okay, well, what we're going to do is we're going to consider there was obviously a loophole a long time ago where people could just be given stuff instead of paid, like, hey, I'll do your weekly shop for you, but I won't pay you. And that was a good way of giving stuff without people having to pay the employee taxes on it, or the employees having to pay the employer taxes on it, or the employee taxes on it. So to get around that, what HMRC came up with was essentially something called P11D rules. And the P11D tax rules were, if you gave they were based on when you gave your employee a benefit, or you gave your employee something, if it was over a certain amount, a certain threshold, then it would be classed as pay, essentially. So if I gave an employee something that was worth £100, for example, then HMRC would treat it as an extension of their pay, and they would want to be paid tax on it. But one of the advantages of benefit in kind taxes is because ultimately you pay the employee pays the income tax on it, but they don't pay the national insurance on it. So by actually giving an employee something instead of just giving them the money to buy it, it actually reduces the employee's tax bill. As an employer, you still have to pay employers' national insurance, but it's slightly different, because instead of paying the usual class 1 employer's national insurance, you get to pay something instead, which is the exact same value, called class 1A employer's national insurance. But the point being is, as an employer, your insurance and your national insurance bill doesn't actually change, but for your employees, they're actually getting something without having to pay that national insurance element on it, and that can be quite attractive. So this is why a lot of people either just give employees benefits because the perceived value, the actual value of those benefits to the employee is higher than the equivalent amount of the pay to do it, or a lot of employers give employees the ability to do what we call salary sacrifice. So an employee will say, well, actually, you know what, I'm gonna sacrifice some of my salary, and I'm gonna get paid less take home pay, but to the employer, I want you to go pay for that thing on my behalf, because actually what's happening is they're saving 12% of whatever that is worth, because they don't have to pay the national insurance on it. So hopefully that was a real simplification of actually what is quite a complex area. But this is why employers and employees do like employee benefits, because there is a tax saving there. But the other side of it is, I guess, just from a business owner's point of view, as I am, then I guess the perceived value of a benefit that you give an employee is probably more than the cash equivalent. But that's quite subjective. Okay, so thanks for watching this video. Hopefully you got your head around that, and I'll see you at the next video.